Hi, today we have Crystal from FFAM Credit Repair, and she is joining us today to share some little bit of tips and how her company can help you. And I do encounter a lot of buyers who ask about credit repair help. So I met Crystal at um, I guess it was a class that you were presenting, and there was such valuable information that even I picked up that I just had to get you into an interview. So thanks for joining us today, Crystal.
It's my pleasure. Thank you, Angela, for having me.
Of course. And first thing I want to ask is how long have you been in the business and what kind of value are you providing your clients over other credit repair companies?
Thank you. Well, FAM has been in business since 2014, and we started out actually helping folks with student loan solutions for the mortgage industry because our owner saw that the bubble was popping with the student loans being an issue. And so we help people get their repayment plans into a good place for their loans so they could get the best possible terms there. And during that process, our owner saw that we needed to begin becoming an offering of trustworthy credit restoration and advising for clients as well, because we saw that in the industry there was some lacking in that department. And we began 1 year later, so it's been about 8 years that we launched the credit restoration and education division of FAM. And so since then, we've had a lot of notoriety brought to us. We are the only company to be trusted to teach for NMLS credit for mortgage loan officers, continued education, and just a lot of things. We have very high success rates. We're referral based only, and we don't just sit on our laurels. We are always wanting to improve and provide better services. We're women owned and run, and well, we have a lot of pride in the success that we've had for our clients.
I love that. I love that you're women owned and run. Um, and so that's really unique about the student loans. And I guess I'll just ask this now. This is sort of a bonus question we didn't talk about. But with millennials and younger generation entering the real estate market, what do you find to be the biggest barrier in terms of their credit?
Good question. So, um, right now, there is a lot of debt from student loans or high credit card debt. Um, I feel like the industry changes a little bit and we see different issues. But lately, that has been a big part of it. There's also, derogatory information that has shown up even more so in the last years during of course, the pandemic and a lot of the issues that people saw with, jobs and all of that have created a lot of obstacles. And credit is very important for getting qualified for good mortgage loan terms. And, you get a higher monthly payment, and that might, because of your credit, and that might take you out of the running. You may not have the income to sustain that. But if you have better credit, then you can qualify for a better loan payment, better interest rate, all of that, better mortgage insurance and things like that, so that you can have more buying power. So
Absolutely, absolutely. So, what do you find in general, not just for the younger generation, but what do you find to be the most, I guess, common or biggest credit problems that you guys encounter?
mm, well, there's a lot of late payments from the last several years, a lot of charge-offs with debt attached to them, but also bankruptcies,
Hmm.
and We have very high success rates with removals of collections and even bankruptcies. Most mortgage loan officers think it's impossible to get bankruptcies removed because they've never seen companies actually succeed at that. But we get about 50-50, which is very high for the industry for bankruptcy. So a lot of people do take that risk, and they might have other issues that they're wanting us to work with as well. And, or it's just the bankruptcies, right? But it's worth trying to get your credit maximized so that in the end you end up having better terms and paying less money for the same exact product that you're buying, right? The same home. So it's important to get your ducks in a row.
Absolutely. And sometimes it is a little bit longer of a process, but I feel like even a year, if people are patient, can really make a lot of headway in improving their credit
6
scores.
months.
Yeah,
Yeah.
6 months, right. I've heard people
Yeah.
do it in less, definitely less than a year, for sure, for sure.
Yeah.
They're committed to it.
Yeah.
So my last question is, what are some common myths about credit that you'd like to dispel? I learned some really good ones when I went to your class, and things that I didn't even know myself. For example, about credit history and keeping some accounts open. So if you could explain some of those.
Yeah, actually, and one that I've been hearing a lot lately is that if you pay your credit card more than once a month, that your credit is going to be better. But the truth is, that balance divided by credit limit ratio is called the revolving debt utilization ratio, and it's volatile at any time. Just because you make an extra payment doesn't mean you get extra payment history added. You only get one on-time payment added to your history per month. But there is like a little bit of a misconception about the payment because you're controlling or you're paying down your balance, right? But if you just pay down your balance and keep your balance there while you're, getting a mortgage loan application done, that's just the same. But it doesn't really matter unless you're actually applying for something. So it doesn't change things. What matters is that you pay once on time, you don't go over your limit, and when the time comes, you want your balances to be between 1 to 19.99% of your credit limit is the best. So it's your choice there. So that's a big one. Another one that I'm always like, don't do anything until we talk. A lot of people think that if you pay your debt on your charge offs, your collections, that's automatically going to help your credit. Now, I can't tell anybody, and we can't tell anyone as professionals in this industry not to pay their debt. That is, not lawful. So I'm not going to say that. But sometimes paying your debt actually does harm to your credit. And it's better to know if something's going to do harm to your credit or benefit your credit before you know, do something like that, right? Especially if you're preparing for a big purchase like your home mortgage. That's another
That
big one.
So if you're, because I've always heard you should have less than 15% of your balance on your credit card. So why is paying it off possibly a negative thing?
Okay. On the credit card side, if you have it at zero, it just counts as neutral, just the way the formula reads. They don't really know that you had a balance last month. They don't know that you just paid it off totally. They only read that there's a balance now, right, when it gets pulled. And so if you have it between 1 to 10%, 1 to 10%, that's the number one spot to be.
Hmm.
The number two spot to be is 10 to 19.99% or 20 to 20% to be. And then 20 to 30% is neutral, just like zero would be.
Interesting.
And then anything over 30% harms your credit, and every 10% you go up, there's a little bit of a slide down, and uh, there's another big slide at 50%, another big slide at 80% and 90%. And then over the limit, you definitely don't want to go there.
No, definitely, definitely.
Yeah.
I don't even think my cards allow me to.
Yeah.
And what's another, you were going to say there was another common myth as well.
Another common myth, let's see. Well, I mentioned the debt and paying it down, the credit cards. But yes, paying off an auto loan. Oh, look, I proved that I paid it off. Or paying off a credit card and closing it. You lose valuable history that's on open accounts, because open accounts actually weigh more than closed accounts. So I know eventually you're going to pay your car off, and that's just, but you want to time it. You want
Right.
to time it to work for you, right? In the best possible way. So getting advice is a very smart option, because these things are very nuanced and every credit profile is slightly different. And so it would be a good idea to reach out and get a professional to take a look and advise you as you prepare for your home purchase.
I was going to say that was one of the things that I found most fascinating is about keeping those closed accounts. Because for me, I was like, oh, great, I'm done. I just want to get them off my report. But when you said that, I just had a whole new perspective on it. Like, oh, okay, I've had some credit history from way back when, 20 plus years, and that might benefit me in some way. So cool, cool. Well, thank you, Crystal. I know we could talk so much longer, and I would love to have you for a much protracted conversation about credit. But I appreciate you being here today, and I'm going to share your contact information at the end of this video so that anyone can reach out to you if they need your assistance or just have some questions on how they can improve their situation. So thank you again.
Thank you.